Trading crypto versus owning crypto. Very different. And I'm going to tell you what the difference is. If you're just coming into the crypto space for the first time and you're comparing crypto to stocks and commodities, that's the issue right there. So we need to know the difference between trading it and just outright owning it and using the platforms themselves. My name is Oto Gomes, and I've been in the crypto industry for almost a decade, and I enjoy and love teaching and educating you to learn more about the space. So if you want to learn the exact difference and why it's important to know the difference between owning crypto and trading crypto, stick to the end of this video and you'll find out why. All right, guys, it's very easy to fall into the emotional trap of trading, okay? Trading crypto, in my opinion, is a trap. New people coming into the space, you don't have much to compare to, right? You have stocks, you have commodities, you have a little bit of real estate. But at the end of the day, you know, these systems are really built around someone needing to lose for me to win. So in this new paradigm shift that we're coming into with crypto, we have to let go of that old mindset. That old mindset is too divisive. It's too tense. It creates too much tension. And so letting go of that and trying to come into a space of abundance and bringing in community and bringing in, we can all win, that is the name of the game. That changes the way that you experience the space. It changes the way that the space can grow. It changes the way that the space even communicates, because it's not divisive. It's not like, well, you snooze, you lose. You know, yeah, you lost, so I can win. We don't like that. We want to win. Everybody wants to win. Nobody wants to lose. So why create a system that somebody needs to lose for me to win? That's the issue, people. Trading is an emotional trap. You really have to be careful about getting into the space and just looking at charts. It's not about that. In my opinion, really, the charting and the trading started because, again, the technology, the innovation of blockchain is so different. It's so innovative that it's incomparable to anything. And so as humans naturally do, we project and we put our idea or our belief into whatever it is that we are experiencing or seeing that we've never experienced before. So it's easy to not see the deeper layers of that industry. All right, so here are 3 variables that make the crypto space incomparable to stocks and commodities and all that stuff that exists in the real world. First of all, it's the processing power, okay, the mining power. The processing power inside, which is all the computers that are connected to that network and offering up their services, right? They're the processing power inside the computer, they're getting rewarded. And so the amount of people that are in the network at any given time is going to determine really price. It'll determine if it should be a time to buy, a time to sell. There's a few things that happens inside the mechanism when the miner decides to turn off the machine or turn it back on that will affect the traders and the people that are buying and selling the token. So that's a huge variable right there in and of itself that can totally affect and change the way that you perceive crypto. Second one is the amount of wallets owning the specific asset, okay? We don't want centralization. That's the issue right there. You know what I'm saying? So we want to be able to see projects diversified as much as possible. And so if there is a centralization, if there is an accumulation in a small number of wallets, okay, that's a centralization. That's a type of centralization. Even if the processing power is fully decentralized, if only a few people own the majority of the circulating supply of that token, then there you go. That's still centralization. You're still giving the money up to a central governing power, because at any point they can come in and just sell into the market and dump into you that was owning the token in the first place. So that is a big variable in and of itself right there. And if you want to learn how to find out more about it and where to find it, definitely take my crypto course, Crypto Made Easy, because I go through the steps and show you all the resources of where to look to see these variables and then determine if it's the right time to buy or sell. Another variable, the third one, is if it's mostly finite and deflationary. So looking at the project and seeing how many tokens are ever going to exist, the circulating supply, as well as looking at the the rate of inflation or deflation. You really want to look at these little variables because, again, that will make all the difference in how you trade crypto. And again, these three variables are what makes all the difference between stocks, commodities, and the crypto space. Those don't exist inside stocks or commodities. And if they do, they're manual, right? They're the people that are making that system work. But it's all humans. It's human beings that can be manipulated, bought, and they fail. So that's a huge hiccup right there. So these three variables right here are all automated inside the blockchain space. And again, just keeping them in mind when you're investing into crypto, because those will make all the difference in the volatility of the token, of the price of the token. But again, we have to step away from the dollar value. These variables that I'm teaching you are really just there so that you can have an awareness that there is a huge difference between the crypto space and stocks and commodities. But don't get stuck in that mindset. Don't get stuck in the trading aspect of crypto. That's such a small way of making money, and really one of 20 plus ways of making money in the crypto space. And in my opinion, the most destructive and toxic way, because of that emotional roller coaster that essentially, if you're trading, you kind of ride subconsciously sometimes. So just be aware of those variables, but really try to step away from the trading. Now, let me explain why. Okay, what is the difference between trading crypto and owning crypto? Well, if you trade crypto, okay, then what you're doing essentially is all you're doing is you're using this asset class, right, which is sort of a form of asset or property class, and you're using that vehicle to increase your fiat, right? That's the whole point of trading anything, trading stocks, trading commodities, trading real estate. You're trying to trade this asset, this thing that has a market value, to gain more dollars, okay? But what's happening here? We're trying to get away from the centralized fiat system into this decentralized blockchain-based system. Not in the Swift, but in the block. So the game is kind of flipped on its head, all right? We're not here in the crypto space trying to accumulate more fiat. The majority of the people in the space that are actually trading, they're trading to accumulate more asset. That's the key. That's the key. So if you look at it as like, okay, this is an asset accumulation game, right? It's not really about the fiat. It's not really about, somebody needs to lose for me to win. It's about me accumulating more of this property, of this asset, of this thing that there's a finite amount of. And just that variable alone, that there's a rare amount of it, you can sit back and relax, because that means that as time moves on, okay, which the only constant in this reality is time. You can't buy more of it, you can't make more of it, and it doesn't stop. So that is built in to the crypto and the blockchain mechanisms, that as time moves forward, the value, right, the scarcity of your asset goes up. The scarcity, it becomes more and more scarce. And so that's why it doesn't really require trading. Crypto doesn't require trading. It requires interaction with the chain, but that's just like everyday use of anything that you're trying to make money in. So that's essentially the biggest difference between trading and owning. Trading, you're just trying to increase the amount of fiat with this asset, whereas in owning, you don't care about the fiat. You're just accumulating more of this asset, and you own it. And so when you own this asset now, and you're accumulating more of that asset, what's going to happen is you now have the lifeblood, okay, of the specific projects, the blockchain projects that you can now come into and start to utilize. Now, here's a very important layer that I want to make sure that it's clear so you really know the difference. The blockchain system, okay, the actual protocol itself doesn't really need a token. It doesn't really need a coin or this thing that represents that blockchain, okay? In my opinion, and this is just my opinion, I believe that the whole industry needed to start it that way, because we put dollar numbers, right, to value. For us to see something being valuable, we have to see a dollar value, like a number to see, if it's above or below the other number and say, oh, that one's more expensive because it's higher. So I believe that the industry had to kind of incorporate these coins to represent these innovations, these engines, so that two things, so that obviously they could raise funds, so that there's a give and take, so people know how much they're giving and then how much they're getting, and that creates a sort of a community creation, like a connection. So that's the first step, and then the other part is for trading. I think they did it for trading so that people can see value in these chains. But here's the amazing perspective. That here's my opinion, right? Once we move forward in this reality and we start to let go of the old paradigm, which is you need to lose for me to win, looking at everything with a dollar value, and for me to survive, I need to make more of this thing so that I can buy more things that I need. So once we step away from that and we really start going into more of a skill system or a barter system, that's when things are going to shift dramatically. But that's essentially the direction that the whole industry is going. So if you want to start now, just do it. Let go of that mentality of wanting to accumulate more dollar and look at it as I'm accumulating assets, because as time moves forward, there's going to be less and less of these. And then the idea is that essentially we'll get into a position that we won't look at these things as valuable anymore, like the actual tokens themselves. The value is going to go to the actual blockchain, to the actual function, the system, the protocol. And the value is going to come from, oh, cool, we don't have to go to work anymore. We don't have to rely on the central systems anymore. There's going to be so much letting go of the old that we will just intrinsically, naturally give value to this thing that's replacing the old. So the game here is stacking sats. That's the game. Stack them sats, stack the sats. So when you stack sats, okay, what does that mean? Bitcoin, let's start with Bitcoin. Bitcoin is just the brand name that's given to the underbelly layer called the blockchain, okay? So Bitcoin, blockchain. Bitcoin, okay, with Bitcoin, you can divide one Bitcoin by 8 decimal points past the period, past the zero. And so when you go down to the lowest decimal point, which is 8 points, 8 zeros past the point, the last one, and that's one, you put a one there, that's a sat. Okay, we call that one Satoshi, which, if you don't know, the creator, the author of the Bitcoin white paper was a person or a group of people named Satoshi Nakamoto. And so the industry just naturally gave it this name, which is, in my opinion, going to be the new dollar. So we're going to be like, oh, that's 15 sats or 25 sats. So slang, right? That's a whole other beast, but we'll get there. So that's the shift, okay? It's shifting from this old paradigm of trading, which is someone needs to lose for me to win, to this new paradigm of owning, which is just an accumulation game. And it's more fun to accumulate with your friends. And so that's really what crypto's all about. Crypto's about having fun accumulating. How do I accumulate and have fun at the same time with my friends? That's what crypto's all about. All right, so to summarize the difference between trading and owning crypto, this is a paradigm shift, people, okay? We're shifting away from the centralized, top governing, controlling systems to now this decentralized, communal, abundant systems where we can tap into each other's opportunities and not need a third party to facilitate the transactions for us. These peer-to-peer systems are the paradigm shift. That's the paradigm shift. It's not the tokens. It's not the trading. It's not the buying and the selling. That's a very small part of it. And in my opinion, the way that they are manipulating and still kind of infiltrating this new technology to perpetuate the same old toxic system. Don't fall for it. It's an emotional trap. Trading is an emotional trap. And I hope that you guys can see that. All right, if you want to dive deeper into all of this and really understand what's going on in the crypto space, make sure you check out my Crypto Made Easy course. It's a 7.5 hour, 22 plus videos of information that I dive deep into all the layers of crypto. So if you're new into the space and you really don't know anything about anything with crypto, try my 4-week challenge. Unbank Yourself, where I'm going to be teaching on a weekly basis and answering any questions live so that you can ask in real time and get to know exactly what you need to go to the next step. Okay. This is going to be a lot of hand holding per se, but I believe without community, without helping each other out, there's no way that we're going to transition properly into this new paradigm. So I'm here offering my services, my time, my effort, my energy to you, and to really kind of look at yourself, look at what you're doing in your life, look at your relationship to money, and see if that's where you want to be. All right? If you guys love this, if you guys love what I'm doing, please make sure you hit that subscribe button, the like button, follow me on Twitter, follow me on Instagram, follow me on TikTok, Stitch, all the good social media platforms, because I love teaching. I love talking to you guys. And always remember to gamify your abundance. Love you guys.